Danske Bank Nordic banking seminar continues with Nordnet and Rasmus Järborg, Chief Product Officer since 2018 and Deputy CEO of Nordnet. It's a pleasure to have you here, Rasmus.
It's a pleasure to be here.
Since you joined, Nordnet has gone through significant strategic development, including large technology investments, which we will get on to shortly. However, first, before questions and answers, a comment from you, Rasmus. Please proceed.
Thank you. So we're going to do a few short slides and we'll jump into the Q&A. But starting really with our mission and the reason we exist as a firm. Since 1996, we've been here really to democratize savings and investments. And I think it's been a very successful strategy to do that. We have garnered over 860 billion now of customer savings capital. We have 1.9 million customers across our 4 Nordic countries. And last year, they did some 50 million trades on exchange. Now that means that we are a pan-Nordic powerhouse. We are the #1 domestic broker on Nordic exchanges last year. Indeed, the 3 years prior to that as well, as measured by traded value, not just trades. We have a #1 position in customer satisfaction, which we measure through NPS, with a strong #1 in Norway, Denmark, Finland, and a very strong #2 in Sweden. We also have the #1 market share of addressable savings capital across the Nordics. Now, this is all predicated on our customer promise of building the best platform for savings and investments. Now, that ing verb form of the word building was chosen with care because we'll always be building. That is our promise to our customers. If we ever think we're done, we need to move those goalposts because we'll never be done. We need to be tinkering and improving this platform all the time. So what is our key selling proposition? Well, I would argue it's the combination of a leading user experience in the channels, app and web, crucially combined with a wide product range of what we call a one-stop shop, delivered through smooth and automated customer journeys, all spinning on a scalable tech platform in the cloud. So what does a typical day on the Nordnet platform look like last year? What you're seeing here is API calls against our platform. So you can see them spin up at the beginning of the day, right as European markets open at 9 a.m. And on a typical day last year, we had some 22,000 API requests per second. And that scaled as high as almost 70,000 during the pandemic. Requests remain high until the US opens. There's another spike of order inserts, and then trading is high until Europe closes. Now we're open until 2200 hours, but activity is lower. So what happens is customers start logging in, and on a typical day we have some 300,000 daily active users, so unique users in the app, some 92,000 on the web, and they start putting trades through. So on a typical day last year, they did almost 200,000 trades across our platform, a quarter of which were cross-border. A cross-border, of course, attracts a higher commission, but also a higher FX spread. So on a typical day, over 600 new customers joined the platform, and they and existing customers put 140 million of fresh capital on the platform. We pay out some 9 million in loans, and there's 85 million of total net fund purchases. So almost by any metric, whether that metric be API calls, whether that metric be DAO, MAU, trades, traded value, new customers, I think you'd agree this is a pretty awesome, scalable platform that we built. It's all about speed for us, and I like to talk about speed as a competitive advantage. So what that means is last year we pushed a new deployment, a new feature, a new flow to the web fronts every 1.6 hours on average. A new version of our app hit the App Store every 3 days on average, and that's counting Android and iOS as one release. In total, almost 31,000 deploys. Now, in and of themselves, those numbers could be seen as meaningless. What it does is really give us the confidence and the ability to deploy at will, to roll forward, roll back, A/B test, canary release, do all these things that a product officer like myself is really happy to have as a capability. And for us, it's also very much about focus and having a clear strategic focus. We'll see what the questions today will be like, but usually we get asked, aren't you going to add other products, other markets? No, we want to focus on savings and investments. We want to focus on individuals. And even if we have companies save for pension plans, we look through that to the end customer being an employee. We're focused on the Nordic region. We have a fantastic runway for growth in our 4 Nordic countries. With 6% market share, there's 94% left to take. And we're focused on digital distribution. So no physical advice, no physical offices, no sales forces, and none of that. So it's all going to be digital. And really, in doing so, we're building a one-stop shop for savings and investments. And I won't bore you by going through all the ticks here, but the idea is really to put ticks in all these boxes in terms of brokerage, funds, pension, margin lending, other retail lending products like mortgage, and of course, our social investment platform, Shareville. You can see there are some key ticks missing, and even in Denmark, we have a tick for pension, but that is a bank product. We want to launch a proper Danish pension product called Livrente later this year or in the beginning of next year. And of course, all these boxes want to expand as well, right? So we're going to add more exchanges, more ETFs, more funds. We just launched a couple of killer funds ourselves, the Nordnet Small Cap Fund, which is an index fund, and the Nordnet Global 125 Levered Index Fund. And really bringing it back to us as an investment case, and we are really the only pan-Nordic digital savings platform operating at scale across the Nordics. You can see the distribution here now. Sweden is still the largest market by revenue, with some 36% and around 20% in the other three markets, Finland, Denmark, and Norway, but they're catching up quickly, as you can see in the growth numbers, and also the margins where Norway was ahead of the curve when it comes to interest rate changes, and of course, but otherwise very similar across the Nordics. And looking at us as an investment, this is kind of the equity story in a single slide, if you will. We are taking market share in a growing market. So, looking at the addressable market that we can reach today, we have doubled our share from 3% in 2016 to 6% in 2022, and we're looking to take more share going forward. Of course, this is a market that grows all the time, right? And you might have off years like 22, but in general, the savings market grows by 6, 7, 8% per year, and we're taking share in that growing market. So we're not content with that, though. We're also going to be expanding our addressable market, which we've done with the Finnish wrapper now last year, and which we're working on now with the Danish Livrente, which will add these dark blue shaded areas there in the 26 column. You can see them more clearly to the right in the pension column, where we have a good share of equities at 15%, but a much smaller share of funds and pensions at 4% and 2% respectively. Of course, funds and pensions go very much hand in hand. A lot of pension capital will be invested in funds, and the fund capital will come from pension premiums. So we see that as a very synergistic expansion. And none of this, would really matter for investors unless we had a rigorous focus on cost discipline, and we do. So we've been really careful stewards of shareholders' money over these last years. We've held costs low. You can see the operating expenses as a relation to savings capital going down to 17 basis points, which I think is very strong in this industry. And that's done by a constant eye on the expense line. So we're looking at how we can get more out of our scalable cloud platform, how we can simplify processes, which takes out both cost but also sort of friction for customers. We look at how we can grow even more efficiently in customer growth, and also, of course, managing third-party spend like market data, premises, all these things. So if you put that all together, then you have a top line that's been growing at plus 30% CAGR. We've held costs at 4% per year over the last 5 years, meaning a lot of this growth has really dropped down to the bottom line, where you have a 70% CAGR on profit before tax. And that is why we can say that we have significant operating leverage in this business. And I think putting all that together, including the original strengths within speed, within UX, within product set, along with this sort of financial control that we have of the operating leverage and the growth of the business, we are positioned to be a long-term winner. We are the only pan-Nordic platform operating at scale. We have passionate and talented people working for us. We have strong, sustainable growth, and we're running with operating leverage in a capital-light model. Thank you.
Thank you, Rasmus. I would like to remind the audience you're very welcome to ask questions online. They will all be anonymous. You can post your questions through the link you received in the invitation, or submit questions through by scanning the QR code. Very interesting introduction, thank you.
Right.
We will get on to strategy and technology development and so on, but I thought we might start in the present and with some of the operating trends. And sure, even although net interest income isn't the point of a company like Nordnet, it has attracted a lot of attention. So if we start there, the operating environment has obviously been impacted by the fact that interest rates have gone up and now they are down again. What is your view on those changes and what it will mean for Nordnet's business model?
No, for sure. I think it's been an interesting conversation and an interesting dynamic, and I think we come from a long period of zero or negative rates, and so the question was, when will we get back to normal? And for a lot of us who've been in this industry for a while, it is normal to have interest rates. And so, in a way, I think I'm happy personally that we're through the looking glass and back into the real world again. I think there were a lot of questions around that and how that would affect customer spending patterns, but also, of course, enable us to generate an NII on the back of excess liquidity. And I think we've handled that very well. I think we've been copacetic around not getting married to the NII line. Are we happy we have it? Absolutely. It's covering costs, it's paying healthy dividends. But like you say, we are in this business to help customers save and invest, which means mutual funds, which means ETFs, which means stocks. And so NII is a nice side effect of our business, but I think it's good that management at Nordnet has been looking through this on a sort of medium-term cycle, saying they're going to go up, then they're going to go down, and our business model needs to work in any environment. Yeah. So I think that's how we're handling it a little bit at the moment. Of course, we've had a lot of income from NII, and I think we've handled it prudently in how we remunerate savings accounts and how we use 2/3 of the liquidity in treasury and 1/3 to lend out. But at the moment, of course, rates are coming down, but they're going to come down a lot slower than the speed they went up. And they're not going to go to zero or negative as far as I know, right? No. So I think market consensus is 2-3%, which is a good long-term level where we can have actually benign stock market growth and NII, which for us really is a sweet spot. So that's sort of the kind of wide landing area that we're aiming at. And we have enough tailwind that I think 24 is going to look pretty good on an NII basis.
And I suppose net interest income depends on both the absolute level of the interest rate, but also on the size of the balance sheet and the volumes. And you've attracted a lot. Yes, you have attracted a lot of volumes recently. And sometimes you comment on the sort of the historical average level of deposits as a share of savings. Yes. And that has come down quite a lot, and can certainly be a consequence of the interest rate environment we're in. But what do you think about when you look towards the future? Is this the new normal level, or will savings dynamics move back to a higher share of deposits of total savings in the future?
I believe so. I think it's, as with anything in this life, there will be a reversion to mean. I believe that both when it comes to trading activity. I think we're seeing that, and we saw that in the Fed numbers today. I think we will see that over time also in terms of the share of AUM held as cash. And there's actually a dynamic that's not, I believe, widely understood, which is the element of the concept of transactional cash or hot money. So as trading activity picks up even more from these levels, people will be going into and out of positions, and there will be excess hot money on accounts, on trading accounts, on investment accounts. And if you multiply that by 1.9 million customers, that's actually going to be quite a sizable deposit base. And we haven't had that. We've also had, as we know, households under economic pressure from inflation, from higher mortgage rates. I think net savings has held up remarkably well, given that, and also recovered, I think, every month since the fall of 22. But so far, customers have been kind of putting the money on and then investing it. They haven't been leaving it there, and that's been the difference in the dynamic. But there's no reason for that not to return to the long-term average, which is sort of 8 to 10%.
Excellent. Transaction income growth and trading frequency has come down from the peak in 2021, and at the same time, the number of customers and savings capital continues to grow, and more strong numbers this morning. And has gone up by around 50% since the end of 2020. What are your expectations for savings capital and customer inflow in the next year and going into next?
I think I'll be careful not to provide any more guidance than we already do, right? But we're guiding on 10 to 15% customer growth. We hit 9.2 last year, so I think given this environment, that's a very good print. Given that it's actually a medium-term through the cycle target, so you can kind of easily work that out, because if that's the growth customer growth target that we communicate, we then have an average savings cap per customer target of just north of 400,000. So putting those two together, you kind of see you can get that number that you're asking for. But I believe we'll see continued growth in all those numbers, because it may be that we're coming down from the peak of 21, like you mentioned, but that was meme stock era.
Yeah.
And that was a crazy time. I'm just happy that our platform held, touch wood. And a lot of other platforms crashed during the time where we were spinning and printing records. But I think what's beautiful in this machine is that we're adding, like you say, a lot of customers every month, and they don't necessarily need to trade as much as during the peak, because there are more of them. So trades per customer, even at a lower level, just needs a small uptick to have a very big effect. Another, just to add one more point, is actually we've seen a good increase in the profitability per trade over the last 5 years, which is a mix question. It's a question of more cross-border trades and more trades coming from countries outside of Sweden, where we have higher pricing power, and where the local exchanges are smaller, so they have to do more cross-border.
Yeah, and that's increasing. You announced last year you're making a strategic review of the unsecured loan portfolio.
Yes.
How is that proceeding?
It's proceeding. I have to be careful what I can say here, but it's no secret that we are reviewing it. We think it's a business it's a good little business, but it doesn't have a lot of strategic logic in our set. It was a very good liquidity play when we had negative or zero interest rates. But at the moment, it's not adding much, so that's why we're looking to either divest it or to put it into runoff. So I wish I could tell you more. I wish this could be the scoop that everybody's been waiting for, but we're in the process, and we're proceeding as quickly as we can. Yeah,
and you will comment more on this later in the year.
As soon as we have something to say, we'll be obliged by Mar to announce it.
Indeed. There has been some changes to regulations when it comes to fund fees and tax deductibility and so on. What's your view on those potential changes, I should say, and how they might impact your customers in Nordnet?
Let's start with funds. So there's a piece of legislation out of the EU called the RIS, Retail Investment Strategy, which was slightly confounding the way it was initially drafted. They identified the potential for conflict of interest in receiving retrocessions from fund companies and then distributing funds. And I won't say there isn't one, but they aimed at taking away those retrocessions from open platforms such as ourselves, which have no conflict of interest, because we don't advise, and we don't advise into any fund, not much less our own. But the draft legislation would allow advisors who do have a conflict of interest to keep it. So it was just strange. I think I'm on record. I've been to both Finansinspektionen here and the Ministry of Finance to present our views, and the Ministry of Finance asks us to translate it and send it into the EU. So we've done that. That is available. Because we think it's philosophically wrong. Having said that, we can absolutely cope with it, because we've been running with this model in Norway since the fall of 2020, right? So we know how to do it financially, and we know how to do it technically. I just don't believe it's better for the consumer, ultimately, because you suddenly have to, what am I paying in a platform fee? What am I paying gross for the fund? Then I'm going to get my retrocession back. So what am I paying now? The fund plus the fee minus the thing. It's confusing. You go to the supermarket, you look at a carton of milk, it's 17 crowns. It doesn't say 10 to the farmer and 7 to ICA. And then somebody gives you 2 crowns back at checkout. So I think we are making a stink about it because we think it's wrong. But as a company, we can absolutely roll with it. And it's part of the reason, only part of the reason, but it is part of the reason we set up our fund company. So we're more agnostic, because we have record AUM in our own funds. I think it's just around 40 billion now, which means we can take the profitability in the production leg as opposed to the distribution leg. We've done this in Norway. We saw a small dip in profitability, which was pretty quickly compensated by volume. So I think, if push comes to shove and this becomes the rule, I think we can rock and roll at the drop of a hat.
Okay. Excellent. And any views on the tax deductibility?
You think with on margin lending? Yeah, that was a bit of a surprise. I don't know whether that was the intended consequence of that legislation. I fully support the aim at consumer lending, and I think that is strange that it is tax deductible. I think this just kind of got caught in the wash. So we'll see. I mean, of course, we are feeding back that. I think other platforms and other banks see it the same way. So we're working through the industry bodies to come back with a concerted response to that proposal. But again, people who use leverage and use margin lending they're pretty price insensitive. So even now with the rates like we talked about have been coming up, we've been raising those rates and seen very little to no impact on volumes. In fact, we have record volumes of margin lending. So of course there's going to be an impact, but I think it might be less than you could fear.
Yeah, thank you. Nordnet has a large capital surplus. You have recently announced a share buyback program.
Well, we might do one. We haven't decided yet. We need approval by the AGM and the regulator.
Correct. I stand corrected. Thank you. But also the early redemption of an additional Tier 1 bond.
And that has been approved. So that's,
So okay. In theory, then, what would the preferred way of capital distribution be? You know, if you have the capacity for a good amount of ordinary dividends, but also a bit more. How?
No, I think. I mean. Again, then theoretically, we have already a generous dividend policy of paying out 70%. We're going to keep doing that, and the feedback we get from investors is that's appreciated. To the extent we have excess capital, and just doing the math after the buyback, there's some 1 to 1.5 billion static, right? Then we're going to be generating capital as we were highly capital generative. Our preference, were we to give that capital back to investors, would be through a buyback program, and we've actually asked a lot of our big investors what they would prefer and the way they would do it, because we like to be transparent like that. Yeah. And so I think we agree that if we were to do this, we want to have something that's sustainable over time. We don't want to blow it off in one quarter. We want to have something which could be rolling and then actually be re-upped, if you will, by the new capital we're generating, and so that could be there as a support to the share price over time.
So smaller amounts, but a long-term perspective. Yeah. Okay. So let's look a little bit at the future. I mean, Nordnet has made a lot of technology investments, and technology is a strategic priority for you.
It's more than that. It's even the foundation for our entire business, right? So.
Indeed, you're moving to the cloud. You have a high product development pace, and a sophisticated product range. Can you talk a little bit about what you're doing at the moment and how you're continuing to build on the technology, to continue to keep and extend your market share?
And thanks for the question, because it's one of my favorite topics. But I think, like I started talking about in my introductory remarks and slides, right, having a scalable tech platform is absolute key. It's part of our key selling proposition, and so we don't kind of look at it as a one-off investment, then in 3 or 5 years we have to do another one. This is where most of our spend is going all the time, right? To our tech department, to our product designers, product owners, and our developers. And so at the moment in the roadmap, it's always chock-a-block. We have so many things to do. We never lack innovation. We need to prioritize firmly between our different initiatives. But at the moment we're working on the Danish livrente, so this account that addresses the 2 trillion crowns that we're not addressing in Denmark already. So that's a big project. It's a long form one. It's both sort of legal, it's financial, and it's technological. So we'll see when that comes out. But in terms of more immediately visible features on the platform, we're working on integrating Shareville, our social community, fully into Nordnet app and web. So it's been a separate property, a separate app, separate web, and it's been in a little bit sort of on the downturn over the last few years because we haven't invested in it to purpose. We want those customers and that interaction in our main app and web. But we've now have over 90% of content being generated on Nordnet, and we have more customers engaging with it than ever. So it's been a fantastic success so far. We're going to pull the plug on the old one by mid-year. So that's going to be very cool, because once we have all those users, all that content, we can start doing more things with it, including AI applications on that customer-generated content. So that's one. We want to build more cool flows in the app. We're talking about, putting app first. You saw the stats. I think it's almost factor 4 now users in the app. So we need to bring more things to the app. Stop loss is coming out soon, and then iceberg orders in the app. But we're also working actually something that we don't talk enough about, which is partner web. So we have a partner business whereby IFAs and asset managers actually can invest on behalf of the customers on our platform through a B2B system. That's old, so we're building a new one called Partner Web on the cloud. And that's some 100 billion of AUM that comes from that customer base, and nobody does it as well as we do. So this is, once we have that new platform, that, you'll hear more about this business.
Interesting. You have already touched upon it a couple of times, but you're taking market share in several markets at the same time, and you're going about that expansion in slightly different ways. We talked about the livrente product in Denmark and the endowment wrapper in Finland.
Yes.
But maybe we can go into the different markets a little bit more and your sort of Nordic strategy in the different areas.
Sure. So it's the strength of the model is that we have centralized product and tech. So we build everything here in Stockholm, and when we push deploy, it gets deployed in 4 markets. And that's true for all features, all functions, all flows, and all financial products except the national account type. So if it's an ISK or an ISA or a endowment wrapper, that needs to be national. So that is the foundation for most everything, is building this fantastic platform in all countries. And when we compete head to head with somebody in Sweden, and we need to build a feature that's better than them, we get that in 4 countries. So we just extend the lead. But let's not forget that we have the #1 position in Finland, in Norway, and Denmark. So it's a very different, where we are sort of extending leads instead of running catch up to the market leader. So that informs the strategy. But otherwise, in addition to having the best platform, it's about content, inspiration, and education. So we field these savings economists and investment coaches in all countries, and they create a lot of content, both on our own channels, on Shareville and YouTube and blogs and podcasts, but also, of course, in all the social media channels, including TikTok. So that's very similar. And then we try to be very, have our ear very close to the ground when it comes to market changes and market demands. For example, the levered Nordnet Global Index Fund 125 was developed because Norwegian customers wanted leverage an index. And then we said, well, this is cool. We're going to launch this in all 4 countries. And so it's a little bit like that. So it's based on the same thing, and then it's sort of a global or Nordic and local combination.
Nordnet has a market-leading position in all markets apart from Sweden. And Sweden is quite fiercely contested by a lot of different players in the market, large banks, investment banks, other financial services providers. What do you think about the competitive environment in Sweden? I mean, you clearly have a large inflow of customers and a savings-coupled growth anyway. So what's your view there? And
I think competition is good, right? It's kept us on our toes. So Sweden is the biggest market. It's the most profitable market. So there's no question why both startups and external or foreign players would come to Sweden first, right? So that keeps our innovation pace and the level at which we have to compete at a very high level, which then helps us, like I was saying, in the other 3 countries. So I think on a global basis, the incumbent banks in Sweden or the Nordics are very strong. But if you zoom in only here, I think there's quite a vast difference in the quality of the UX and the product set, and also in the pace of deployment between us and the incumbents. There are some startups. I think some of them have great ideas and great flows. I think they're finding out how difficult it is to build scale on distribution. And given that most VC funding has dried up, we get a lot of inbounds now saying, will you buy this? And we're like, what are we actually buying? Because we can't reuse the tech, and you don't have very many customers. But we'll see. We have a strong competitor here, and we have some ones that are being set up. So I think we don't fear competition. We welcome it.
Okay, great. We talked a lot about a couple of different ways of expanding the business. We're doing a lot in technology and so on. Are there any other ways in which you could sort of add to your product range
So, I mean, like I was saying, we don't want to add credit cards and salary accounts and things like that. We don't want to become a full service bank. But of course, we're always looking at, pockets that are underserved, whether those be, markets that nobody's providing electronic access to. We added London a couple of years back because nobody else had that. We're looking at exciting ETFs or funds, and if they don't exist in the market, we create them in our own fund company, like this levered fund that won an award for innovation. Same thing with the small cap. We found the small cap funds that existed were too expensive, or their indices included actually large cap. So we created a new index Nordics together with Nasdaq. So it's a lot of stuff like that. That's how you keep adding to the product set, identifying something that is missing or something that customers want, and then building that for them. And so I think that's a very good way of growing, and we're going to keep doing that because we've been innovating since '96. We ain't going to stop now.
No. Okay. You have also announced you are taking or making more marketing investments or spending on marketing. Can you talk more about where that investment will go and when we will start to see the consequences in terms of, for example, customer inflow and so on, and in which markets?
Sure. So we, if you look at customer acquisition from an LTV to CAC basis, we have 24 turns, even on a discounted basis. So lifetime value over customer acquisition cost is 24x, which is just crazy high. So we have been getting a lot of questions and asking ourselves, should we be putting more marketing dollars against that number? Because we have a ways to go, right? And so we felt that we wanted to really be more complete in the one-stop shop and be even better in the UX. We recently got a lot of very public confirmation that we're at a very high level when it comes to that. So we ranked #1 in the EPSI survey in Finland and Denmark. We came in a very strong #2 in the SKI in Sweden. We're the only company to increase our rating, and we were ranked #1 in product quality, which as a CPO I love, right? So that we kind of thought, well, is this the time now, right? So we felt we have a bit of wind in our sails. So we are going to put, and we announced in the Q4 results, we're going to add another 80 million to the marketing spend. We've been spending very little on even a Nordic basis, but certainly on a global basis. And it's kind of what we call top funnel, so a lot of brand awareness. Because we found that people who know about us, they already like us, and they're usually customers. But outside that bubble, we don't really punch through. So we need to build brand awareness and build brand preference so that we're refilling the people who could consider us when they start their savings. We haven't decided the split over the countries, but it's going to be focused on Sweden, Denmark, Norway, in that order. In Finland, we are unthreatened. We've announced that we're actually going to take over all of Handelsbanken's savings customers in Finland, so we're kind of undisputed there. And so I'm sure my colleague Suvi thinks it's annoying she won't get any extra marketing money, but we want to make sure that we match or even outspend Avanza in Sweden, that we take advantage of the fantastic growth we have in Denmark, pouring a bit of gasoline on that fire because it's already growing well, but how much faster could it grow? And again, shoring up Norway, where we also have a new country manager in Norway and Denmark. So that's kind of how we see it. It probably won't hit the market until after summer. We're in the RFP stage right now, so we're interviewing creative agencies. At this level, you need to have a fantastic concept, so we need to work with the right people, and we have had fantastic interest from the market in coming in and pitching for that. But then they need to develop the concept, then you're in summer, and as you know, there's no point buying marketing in the Nordics in the summer, where everybody is out sailing or other things, and so that's probably going to start after the summer.
And then in terms of the when do you expect to see the consequences?
It's tricky, right? Especially top funnel, because we've been doing a lot of low funnel, so conversion marketing, performance marketing, and there you can see it immediately. You kind of you buy the search word or you don't. So with this, and I know we had a debate internally because to a degree it's an article of faith. And if you only spent it for 6 months or 12 months and then said, oh, I don't see anything, I'm going to cut this, then you really threw all that money down the toilet. So you need to have a bit of staying power in this space, but within 12 to 18 months we should be seeing something on the preference and then therefore in the customer acquisition.
Okay, excellent. You have had a lot of experience of international expansion and so on, and there's a lot of things to do at the moment in your current domestic markets. Are there any plans long term to grow even larger?
Not plans, but never say never. But for now we have so much to do, like you say, and I think we have a really strong position to grow from and a really long runway, given how strong we are. We still only have 6% of the market, and also, like you alluded to, we've learned, not maybe the hard way, but the long way, how long it takes to become a viable option in Norway, Denmark, and Finland. It took us 8 to 10 years to build scalable growth, to be seen as a trusted partner, a brand where you can actually partner with your life savings, and as opposed to any dropship company. We're not asking you to click home a T-shirt. We're asking you to partner with your life savings. So you need to have longevity. You need to have a strong brand. You need to be seen as trusted and secure. And I think the experiences of some of the pan-European platforms that went kind of broad but very light into markets failed, because you need to be seen to be there for the long term. So having said that, at some point, would we look abroad or out to the Nordics? Sure.
How difficult would it be to export the current business model in terms of regulations, and as opposed to the Nordic area, which I suppose might...
I mean, apart from the languages in 3 out of the 4 countries, the Nordic regulation isn't as close as you would think. I mean, it's all based on EU law, so it's either directives, which then need to be codified into national law, or it's regulations. But still, the interpretation and the application is very different. The tax regimes are different. The tax-efficient accounts are therefore different. You need all the infrastructure, EID, credit scoring, all these things. So it is trickier than you think. Technologically, the platform can scale and just move anywhere, right? It's on Google Cloud. We have nodes all over Europe. But then you need translation. That's easy now with AI. Then you need that infrastructure. But then you need to make sure that you're following all the local regulations properly. You need boots on the ground, I think. You can't do this as sort of suitcase banking. So by no means impossible, but there's a lot of work.
Sustainability is an important trend that's increasing, even although recently it seems as if ESG is competing for attention with a lot of other things happening in the world. Can you say anything about what Nordnet is doing in that area? Sure. and how you're progressing there in the next couple of years? So,
I mean, at a very sort of base level of our being, we believe that our mission to democratize savings and investments is a great thing. Also from an ESG perspective, we're helping and educating and inspiring people to save. And we want to do that in a diversified manner. So at the moment, our customer skews male. We've launched female investment networks in 3 countries, and now Finland is joining the party. They've been doing other things, but they're now using the template, which has been very successful. Yeah. We know women are better investors on a risk-adjusted basis, so it's a win-win for us to have more women on the platform. That's one big thing that we're doing. Internally, in terms of us, we climate compensate over 100%. So as a digital player, we don't have much of a footprint. So we started looking at, okay, well, how can we help customers make more informed decisions? So we were the first to build filters for unwanted holdings on mutual funds in the Nordics and ETFs, so you can screen away, I don't know what, palm oil and weapons of mass destruction. But we were also the first to add Article 8 and 9 tagging, so you can sort that. Then, of course, when it comes to our own fund company, we made the decision early on that all those funds need to be ESG. So we don't follow the base indices, we follow the ESG variants of those indices. And I think that's been very strong. We want to be buying in more market data or ESG data to populate instrument pages, so that people, for example, could see what's my entire CO2 footprint of my holdings. So I have these shares in those companies or these fund units and those funds. What does that mean for me? And how can I give some decision support that you can say, well, if you bought this and sold that, then you could actually lower your footprint. So I think we don't want to tell people what to do, but we want to give them the tools and the information and the education for them to decide what to do.
Excellent. We are approaching the end of this discussion. Unfortunately, it's been very nice to have you here.
I could stand here all day.
Yes. Thank you for joining us, Rasmus.
Well, thank you.
It's a pleasure to have you here. We are going to go to another break, and then we will return with the last couple of sessions of the day when we will be meeting Handelsbanken and Swedbank. Thank you.